There's no doubt that Plan G offers the most comprehensive coverage to new Medicare beneficiaries. But is it the best? Well, honestly, as health insurance brokers, we tend to think so. But watch this video so you can make up your own mind. Now, I'm going to go over the basics of Medicare supplement plans first, but if you're a pro, make sure to check out the chapters in the description below and you can just skip ahead. So very often people get hung up on the costs associated with Medicare because they didn't expect them, or some of the things that aren't covered. So I do want to stress that Original Medicare really does offer excellent coverage, but there are financial gaps, and as always, you do need to be aware of those. So Original Medicare is comprised of Medicare Part A, which is your hospital insurance, and Medicare Part B, which is your medical or outpatient insurance, basically anytime you see a doctor. And there are separate co-pays, deductibles, co-insurance, etc. for each parts of Medicare. Now, Medicare Part A doesn't usually have a premium, although if you do have to pay a premium for Medicare Part A based on yours or your spouse's work history or really lack thereof, then it can certainly be rather expensive. But Medicare Part A always does have deductibles, and then there may be co-pays depending upon the type of facility you're being treated in, and of course your length of stay. Additionally, with Medicare Part A and Original Medicare in general, there is no out-of-pocket maximum, and that is a huge problem. So as a reminder, a deductible is the amount that you have to meet out of pocket before your insurance begins to contribute to the cost share. At that point, you would be responsible for a copay or a co-insurance. The deductible for Part A is really a little strange because it's not applied annually or once per year, but rather per benefit period. A benefit period is basically any time you have been hospitalized. It's 60 days from your release during which you don't receive any more inpatient Part A care. Like I said, it is very confusing, but that means you could potentially have to meet more than one deductible and have more than one benefit period in a given year with Part A if you do have to be hospitalized multiple times. There's more good news, bad news with Part A regarding the copays. So if you are hospitalized and you're receiving care in an inpatient setting, then there actually is no copay for the first 60 days. However, after that, it can be very expensive. Similarly, with skilled nursing facilities, there's no copay for the first 20 days, but again, after that, rather expensive. Then there's Part B, which is much easier to understand. There is always a premium for Part B, and that is determined by your income. So in 2024, the Part B base beneficiary premium, meaning sort of the lowest amount you could pay, is $174.70. Now that is up about $10 from 2023, and you can expect that it will increase in 2025. However, you may actually be responsible for a larger payment based upon your income. So you can see here, this is how the tax brackets are broken down in 2024 based on your income. And if you do make, for example, if you are single, head of household, etc., more than $103,001, then your Part B monthly adjustment would be $69.90. You would add that to the base beneficiary premium, and so on and so forth. However, Medicare is looking at your income from 2 years prior. So if you have recently retired and perhaps you were making a larger income, but now your income has drastically decreased due to retirement, it's very important that you file this form. That way you can get that adjusted amount reflected in your new Part B premium. Then there is the deductible for Part B, again, the amount that you have to meet out of pocket first. And in 2024, the Part B deductible is $240. This is applied annually, so once per year, no benefit periods or anything confusing there. And once you've met your deductible, you'll be responsible for co-insurance. And with Part B, it's pretty much going to be 20% co-insurance across the board for the Medicare approved amount. As I mentioned earlier, there is no out-of-pocket maximum with either Part A or Part B. That out-of-pocket maximum is traditionally there to protect you from major medical bills. So usually there is some type of financial threshold, which is your out-of-pocket maximum. And should you meet that financial threshold in your medical spending in a given year, then your insurance carrier would take on the bills for the remainder of the calendar year for those covered in-network services. This is a very important protection that is not offered by Original Medicare. And you can already see without that out-of-pocket maximum, especially as somebody who is older, who might be perhaps more likely to have more extensive medical needs, how those medical bills could certainly stack up. So Medicare supplement plans can step in to, of course, impose an out-of-pocket maximum and also help with those deductibles, copays, and coinsurance. With Medicare supplement plans, there are 10 different plans to choose from with varying levels of coverage and price points. More on that later in the video. And remember, these benefits are standardized. That makes these plans much easier to shop for because as you'll see in a moment when we go over the benefits, for example, for Plan G are going to be the same regardless of who your carrier is. The same for Plan F, Plan N, etc. And of course, these plans are offered by private carriers. That being said, if your doctor accepts Original Medicare, they will accept your Medicare supplement plan regardless of who the carrier is. So there really are no networks to be concerned with. This page is pulled directly from Medicare.gov, and I think it's a very easy to understand snapshot of the different plans and comparing the benefits offered by each of the 10 different plans. So as I said, 10 different plans, Plan A, B, C, D, F, G, K, L, M, and N. And here are all the benefits that may or may not be offered by those plans. For example, Part A coinsurance, very important as you just saw, and hospital costs up to an additional 365 days after Medicare benefits are used. Now, some people feel that Medicare supplement plans aren't really necessary. They're a waste of money, and it's not likely that you're going to be hospitalized for more than 60 days. And I have to say, this is really, really bad advice. It's not true. If you are diagnosed with a serious medical illness, for example, cancer, you may be in and out of the hospital quite frequently. You may be released and readmitted within that same benefit period, and it is entirely possible, if not likely, that you would surpass those 60 days. Also, you could easily surpass your lifetime reserves, which leaves you with exorbitant costs. Now, luckily, all Medicare supplement plans will cover this. Then there are Part B coinsurance or copays. Now, these can be rather significant or not. For something like a regular doctor's visit, 20% of the Medicare approved amount is probably not rather significant. But when we start talking about x-rays, MRIs, ambulance services, then those costs can be more significant. Now, all the Medicare supplement plans will cover them to some extent. Plans K and L are what's known as cost sharing plans, so they will cover a portion of your cost share. So Plan K would cover 50% of the 20% that you would be charged. Plan L would cover 75% of the 20% that you would be charged. Now you'll see here that Plan N is asterisked, and if you scroll down, Plan N pays 100% of the costs of Part B services, except for co-payments for some office visits and some emergency room visits. And that's really one of the key differences between Plan N and Plan G, is that Plan G, of course, is going to cover all of your coinsurance and copays, and Plan N will cover it almost entirely with some coinsurance or copays for certain types of doctor's visits. Then there's blood for the first 3 pints. Again, all plans will cover it to some extent. Part A, hospice care coinsurance. We're looking at the same thing. Skilled nursing facility care coinsurance. As you've just seen, that one is very important because it's highly likely that if you needed to recover in a skilled nursing facility, you would be there for more than 20 days. Standard is somewhere between 20 to 30 days, and those costs are rather costly. So definitely stay away from Plan A and Plan B because they don't cover it at all. Part A deductible, that is going to be covered by all plans to some extent, except for Plan A. Again, we've got those cost-sharing plans, but we've talked about how you could meet more than one benefit period in a given year, which would mean more than one deductible. And then there's the Part B deductible. This is not offered by any plans offered to new beneficiaries. So the only plan really recently that was offering it was Plan F. It's not offered by Plan G. But again, that Part B deductible, once per year in 2024, it's $240. And even when Plan F was being offered to new enrollees, we still would steer our clients towards Plan G because basically what you're looking at is between Plan F and Plan G. If we're talking about an additional cost of $240 per year for Plan G, that would break down to an additional $20 per month, basically. And what we would often see is that the Plan F premiums were way more than $20 per month, more than Plan G. And then, of course, Plan F, those rate increases tended to be more drastic than Plan G. Then there's Part B excess charges. This is not covered by any plans offered to new beneficiaries except for Plan G. So what is a Part B excess charge? Well, basically, if a doctor agrees to contract with Original Medicare, they are willing to accept the amount that Original Medicare is going to pay, except that they can choose to charge up to 15% more. And that is what's known as a Part B excess charge. The only plan that will cover that is Plan G. Then there's foreign travel emergency. That's helpful if you're planning on traveling. So Plan C, D, F, G, M, and N will cover that. And then that out-of-pocket limit. Now, most plans actually don't offer an out-of-pocket limit because they're covering almost everything anyway. The exception to that is Plan K and Plan L. Again, those cost-sharing plans, they will impose some type of out-of-pocket maximum. There are also high deductible versions of Plan F and Plan G offered. We discussed that in other videos, but I'm not really going to talk about that today. So you can see from looking at this brief snapshot that with the exception of Plan F, which again, no longer being offered to new enrollees, Plan G is pretty much covering everything. The most similar plan to Plan G is Plan N, and we're going to talk about that in just a moment. So now you can see why I said Plan G does offer you the most comprehensive coverage. But we have to take into consideration those costs. So let's take a look at some of the costs and run numbers. We're going to take a look at some of the 2024 plans. That's what's available at the time of the recording of this video. Remember that you actually can record in a Medicare supplement plan year-round at any point. Now, Medicare supplement plan pricing is largely dependent upon where you live. So I'm putting in a North Carolina zip code. We're going to click Medigap policy, find plans. Okay, then it's going to ask us just some basic information. I'm just going to put in that we are 65, female, who does not smoke. This is new, this household discount option, which basically you may be able to get a discount, a spouse discount or roommate discount. I'm not going to put that in for right now, but that's just something interesting. We're updating our prices, and I want to scroll through these. Again, Plan A and Plan B, maybe not the best bang for your buck, but take a look anyway. Remember though that this is sort of a lifetime commitment. So if you go with Plan A and later down the line you decide you want to switch to a different plan, you might not be able to. Let's scroll down. But again, we got $94 to $296. That's a pretty wide range. B, $134 to $271. Plan C, not really available to new beneficiaries. D, $120 to $348. Plan F, not really available to new beneficiaries. Plan F, high deductible, still not available to new beneficiaries. Plan G, here's what we want to look at. $85 to $349. I'm going to compare that to Plan N mostly because that is the closest plan available. The high deductible version, pretty cheap, $31 to $51. Now, the downside of that high deductible is that it does have a very, very high deductible. So you would have to meet that very high deductible before your plan begins to contribute to the cost share. So if you were interested in that, then you would need to run the numbers comparing your premium plus the deductible to a regular Plan G with whatever premium you were able to get with no deductible. Sometimes it does work out in your benefit to go with the high deductible version. Sometimes not. It really depends what premium you're able to get. Continue to scroll down. Plan K and Plan L, those are those cost-sharing plans. Plan M. Now let's focus on Plan N. Okay, so Plan N ranges somewhere between $74 to $302 with the information that we put in. And Plan G, $85 to $349 per month. So what's the differences in these prices? That's really just the carriers. Remember that the benefits are standardized. So you might be able to get a carrier offering a plan for $85. You might be able to get one with a plan offering it for $349. So which one do you choose? Well, one that's on the lower end of the spectrum, but also one that has a history of lower, more stable rate increases. You don't want to enroll in a plan that this year is $85 and next year is $380 because they had a huge jump. So based on this, seeing how very, very similar it is, what you would need to see is what premiums you're able to get. If you're able to get a Plan G for $112 and a Plan N for I don't know, 104, then it's probably in your best interest to go for the Plan G because it's a negligible difference for those added benefits. However, if the best Plan G you can get is 180 and the best Plan N you can get is 80, then Plan N might be the way to go. Those are the plans that I'm most interested in comparing because, again, they are the most similar. And these other plans, unless, you really, really just need something more bare bones in place and you can get an amazing premium, I'm not sure that it's really in your best interest. Because let's say you were able to get plans that are on the lowest end of the spectrum. Plan K, $54. Versus Plan G, $85, we're talking about a $30 per month difference. And the benefits offered by Plan G definitely outweigh the savings that you might be able to get. A $30 difference times 12 months, $360. You're definitely going to get more than $360 as far as bang for your buck with Plan G. So truthfully, in this instance, if that's you and you just need a plan with a really low premium, you'd probably be better off with a high deductible Plan G than one of those cost-sharing plans. And if you click here where it says View Policies, then you can see it'll break it down. You're going to have to call individually. But look, here, $85, $100, $101, $102, $103. So they do tend to be actually on the lower end of the spectrum. Keep scrolling. It'll keep going up and up and up and up. But let's see, it looks like, we're about, halfway through, and they haven't jumped up tremendously. Let's see where that big jump happens, if it's more gradual or if it is a big jump, just one plan happens to be charging way more than the others. Okay, so it looks like these are where our big jumps are occurring, from 150 to 187. That's pretty significant. And then we jump to 225. So all of a sudden, we're getting into the much more expensive ones. Wow, this one's over $100 more expensive than the next one. But remember, carriers don't matter as much with Medicare supplement plans. If your doctor accepts original Medicare, they accept your supplement plan. The only reason that the carrier is important is A, that history of lower, more stable rate increases. And, you do want to have a Medicare supplement plan that has better customer service. You want to be able to get in touch if you have questions, and some carriers do have better customer service than others. There's also community pricing versus attained age versus issued age. Community pricing is, going to be for the whole community in general. Attained age means lower prices for younger buyers. Issue age has more to do with the age you are when the plan was issued. But, don't necessarily feel like, oh, I've had Cigna in the past. I know Cigna, so I want to go with Cigna. They're definitely better than what was the least expensive one? Scroll all the way down. Physician Select. That doesn't necessarily mean that they're better because, again, same benefits.
A brief pause here to remind you that at iHealthBrokers, we are, of course, licensed health insurance brokers who are licensed nationwide. Now, if you do have any questions whatsoever, if you have feedback, comments, you can reach us in the comments below or at the number on the screen. There's absolutely no charge for our services. We really are here to help. And we do release these videos on a weekly basis, so please make sure to subscribe and like this video as well. Now, we used to very often compare Plan G to Plan F. Plan F, as I said, is no longer being offered to new Medicare beneficiaries, but those plans are extremely similar. The only difference, of course, being that Part B deductible. So historically, it was very, very easy for us to run numbers and still see that Plan G would more often than not come out on top. But it's not just those numbers that we would look at when comparing Plan G and Plan F. Every year, Medicare supplement plans and health insurance plans in general do tend to increase to account for inflation and rising healthcare costs. This is unfortunately just the way of it. And that's why it's very, very important that you work with a broker. That way you make sure that you not only pick a plan that has a low rate now, but with a carrier that has a history of lower, more stable rate increases. Because once you select your Medicare supplement plan, you're pretty much locked into that for life. Remember, with Medicare supplement plans, there can be medical underwriting. That's why it's in your best interest to enroll in the 6-month window after you turn 65 and enroll in Part B. During this time, there is no medical underwriting, which means you cannot be charged more or denied based on your health. Should you choose to enroll outside of that window, then there may be medical underwriting, which means you could be charged more, you could be denied. And that goes for switching plans as well. So it's not like you can enroll in one Medicare supplement plan with one carrier at one point and just switch at a later date. It's not that easy. So as I said, with these rising healthcare costs and inflation, those premiums do tend to go up. However, we have noticed a trend where with Plan G in general, just sort of across the board, the rate increases did seem to be much more stable or flatlined when compared to Plan F. With Plan F being phased out, things may change. The most similar plan offered to new enrollees other than Plan G, of course, would be Plan N. So if you can access a Plan N that is much less expensive with a carrier that has a history of lower, more stable rate increases, then that might be the way to go. Now remember, with Original Medicare and even with a Medicare supplement plan, you will still need some type of prescription drug coverage because Original Medicare and Medicare supplement plans don't cover prescription drugs. Medicare supplement plans, again, just a financial solution. So if you'd like to learn more about Medicare Part D for prescription drug plans, make sure to check out this video here. There are some big changes coming to Medicare Part D. And of course, make sure to check out this Medicare playlist as well to learn all about Medicare. As always, if you have questions, you can reach us in the comments or at the number on the screen. There's no charge for our services, and please do make sure to like and subscribe. We'll see you next time.